Welcome to Augusta Corp,
where we analyze financial information from different companies.
and our industry is food. So, the first business that we chose is Fairwood, and Fairwood is located in Hong Kong. And we got our data from Yahoo Finance, and this income statement, the fiscal year ends March of 31st. And as you can see, the sales revenue is listed over here in millions of HKD, and then there's cost of revenue, gross profit, operating expenses, operating income, interest expense, pre-tax income, income tax expense, and then at the end is net income.
Secondly, we have shown you the balance sheet for Fairwood. So we have two sides of it, the assets and the liability side. So basically we have listed out the current fixed assets, and basically the highlighted numbers are the totals. And then for liabilities, we have current liabilities, long-term debt, and total liabilities. And we also have shareholders' equity.
Lastly, we have our financial ratios for Fairwood based on the Yahoo Finance data. So first of all, we have the GPM, and then secondly, we have the operating profit margin, and we also have the net profit margin, and we also have current ratio and asset test ratio, and this is like a to test the Fairwood's liquidity. And we also have ROCE, return on capital employed, and we also have the ROA.
All right, our second business that we have selected is none other than McDonald's.
Whoa.
We have gathered our data from McDonald's annual report, and the fiscal year ends in December 31st. So this is our income statement. We have listed out all of these categories, and the highlighted ones are the big numbers.
McDonald's. Okay, next we have our balance sheet for McDonald's, and again, this is also from McDonald's annual report, and the fiscal year ends on December 31st. And we have the total current assets, and we also have the non-current assets, and that adds up to total assets. And next we have liabilities, right? And as you can see highlighted, we have the total liabilities out there for you, and at the end we have shareholders' equity.
And our last slide for McDonald's, we have the financial ratios. So we have listed out all the ratios, starting with gross profit margin, operating profit margin, net profit margin, and current ratio, asset test ratio, return on capital employed, and return on assets.
And all the ratios are listed very clearly from 2022, 2023, and 2024. So lastly, our third business in the food industry is Burger King. And we got our data from Burger King reports, and the fiscal year also ends on December 31st. And as you can see, the Burger King report is stated in Indian rupees, and one crore is equals to 10 million. Because due to inflation, Indian their currency is really high. So as you can see in our income statement or profit and loss statement, we have revenue, cost of goods sold, gross profit, and operating expenses, operating income, interest expense, pre-tax income, income tax expense, and at the end we have a net income. And as you can see, Burger King is negative at net income, and that means they're losing money, and because of that, they don't have any tax expenses.
As for the balance sheet for Burger King, which we also got from Burger King reports, the numbers are all in Indian rupees, and we have listed out the two sides of the balance sheet, the assets and the liabilities. The highlighted numbers are also the total, so like the total assets, the total liabilities, and the total equity, and they are all aligned perfectly with the years.
And lastly, we have the financial ratios for Burger King, and the data is also from Burger King reports. And as you can see on the right, we have this table listing out the gross profit margin, operating profit margin, net profit margin, current ratio, and asset test ratio, and we also have return on capital employed, and also lastly return on assets, and they're all based on each year, so 2022, 2023, and 2024.
Okay, now we have arrived at the comparative analysis. This is based off their net income and their profit. So we have made 3 different graphs for the 3 different restaurants. Starting with Fairwood, you may notice that it is pretty stable. It is not having much of a change, which could be good in some ways. And then for McDonald's, there is a slight increase and then a little bit of a decrease. But for Burger King, they are way under the zeros, completely negative.
So, second part of our comparative analysis, who did the best out of these three corporations? So, as you can see, revenue growth, actually Burger King did the best with a growth of 35%. And then gross profit margin, McDonald's has the best margin. And then McDonald's also has the best operating margin and also net profit margin. However, Fairwood is actually the best compared out of all these three. They're the most liquid, with a current ratio of 1.77 and acid test ratio of 1.24, and McDonald's has the best ROCE and also ROA. So on the right, you can see liquidity, Fairwood is doing the best, and then revenue growth, Burger King is doing the best right now. Profitability is also McDonald's, and then operational efficiency is by McDonald's, and then return on investment is McDonald's doing the best, and then financial stability, Fairwood is doing the best, and then lastly, growth potential, Burger King is doing the best because as you can see, their revenue growth grew by 35%, and they do have a lot of potential.
Thank you.
Thank you for listening. Hallelujah. Have a good week.
Let's bounce.